Yes, good morning, students, and welcome to the class. Welcome to the class recap session. Today is the recap session for costing principles and cost statements. So we have with us here Jayant sir. Good morning, Jayant sir, and a warm welcome to you, sir.
Good morning.
Yes, sir. You may please start the session, sir.
Before starting the session, is there any particular doubt they have which I can solve, or you want me to just run through what we had done? Because cost sheet and all we have done in detail as to how to prepare a cost sheet for different kind of industries and things like that. So you have any specific doubt, or you want me to solve a specific problem or something? So can I'll give you 2 minutes time. If you have anything, can you post? Otherwise, I'll just run through.
Okay, sir. I will have to wait for another maybe by 8:30 if the students are there because students are just coming in now.
Okay.
So you can start the session. In between, we can ask the questions to them.
Oh, fine.
Yes.
One sec. Just switch on the fan. Okay. So we have understood already that along with financial account, why cost account and management account evolved. Because financial account, you prepare a balance sheet, profit and loss account, and all that, and that is required for the regulator purpose per se, or it will be required for your stakeholders. But when we talk about the cost and management accounts, it is very much important for the internal management to have an informed decision. So you can have MIS and all. So with the help of this, you will be able to take an informed decision as to whether to continue the product or expand the line of business, or any other decision to shut down the business. So all these, oh yeah, make one more profitable. If a cost center is more profitable, produce more of such products. So lot of decision making happens with the help of the cost and management account, and also very importantly, the cost and management account and the financial accounting per se is as of now integrated. So you don't have any separate cost and management account or separate finance. So budget, forecast, all those things are tools which are very much part of cost and management account. So it will not work in isolation, but it will work in connection. Both are them are coordinated and they are integrated. So then all these decision making, WH questions, decision making, when to do, how to do, how much to do, what level of capacity to do. So all these WH questions can be answered with the help of your cost and management accounts. So the information what you get is in the form of MIS, and with the MIS, you will be able to take a better decision. And then coming to the definitions. So we saw what is the definition of cost. It is a measurement in monetary terms of resources used for some purpose. So all the components are very, very important. There should be a measurement, that is unit. Then monetary terms, it should be expressed in the monetary terms. You should use the resources for a particular purpose. So that is the definition of cost. So all the components are there, then it is called a cost. And costing is defined as a process of a determination of cost. So how do you determine the cost is what is meant by costing. Then a cost accounting is a involves the process of classifying, identifying, and recording of expenditure with the intention of ascertaining cost of a cost center or a cost unit for the purpose of cost control. So very important, cost accounting is a process. So it involves the process of how you classify the cost, identify the cost, and record the same with the intention of ascertaining a cost. So I told you costing is the process of ascertaining. Cost accounting, you classify, you identify, and you record the transaction or a cost of a particular cost center or cost unit. The very purpose of the same shall be the cost control. So with this some other things, cost bookkeeping. So it is keeping of records of cost of present classification. So cost bookkeeping and all is not very relevant as of now, because I told the cost management accounts and the financial accounts and all are integrated. So with the help of this, the cost bookkeeping is a very narrow term compared to the cost accounting. So cost control, I told you, the purpose of cost accounting is cost control. So you have to control the cost. So you have the budgeted cost, you compare the budgeted cost with the actual cost and what is the variance. So we have solved a problem wherein we have calculated the variance. If my estimated or the budget cost is more than my actual cost, that means actually I've spent more less and budget is more, so it is a favorable variance. If it is the other way around, where my budgeted cost is less than the actual cost, that means I have in actual I have spent more than what is budgeted. So in this case, it is a uh, adverse variance or an unfavorable variance. So I repeat, so these concepts they can ask you as a multiple choice question. If the budgeted cost is more than the actual cost, that means I have achieved the budget. So that means I in actual have spent less and in budget it is more. In that case, it is a favorable variance because I could save cost. Budgeted cost say I have spent less, so I have saved the cost. So that is because of that it is a favorable variance, and if it is the other way around, it is an adverse variance because I have not being able to achieve the budget. I've exceeded the budget. So when I exceed the budget, it is a adverse. It's a adverse variance. My battery will go down. Okay, so then we saw what is cost analysis. So it tries to link cost with the documentation, determinants of drivers, and also provides tools to measure. So when you start analyzing the cost with the help of the tools and all that, it is known as a cost analysis. Just just a sec, I'll just put the laptop on charge. Charge is not there. 1 second. Okay. So let us try to understand the manufacturing cost flow chart. So you have direct material, direct labor, and factory overheads all put together, and indirect material. See, all the direct will form part of the prime cost. You have factory overheads also, which is indirect material, indirect labor, indirect expenses. So all this, when you are worked upon, you get the work in progress to manufacturing, that is the factory production, and then you do more of the expenses, then you will get the finished goods. I told you for each cost there should be a cost object. The cost object is I will explain with the example. So an expense that is related to a product or service, like the cost of material used to produce a TV set. So that is the cost object, or any expense related to time. So anything object means it should be linked to something. So so for any cost, the association or linking of that product is the cost object. So and each of the cost should have a particular object. So allocation of cost to cost object. So you have identified the activities and then you have identified the cost. So activities can be A, B, C. Cost can be direct material, direct labor, administrative overheads, and all that. This cost you are allocating to the activity. So to activity A, how much I allocate? Activity B, how much I allocate? Activity C, how much I allocate? So, and what all is allocated, if it is traceable to the cost object, then only it will suffice your purpose. And then you are going to, once you allocate to the particular activity, it becomes a cost object. So cost object A, cost object B, and then allocation of objects on, so whichever cannot be directly attributable as a cost object, that you will be allocating based on the proportionality. So at the broader level, a cost object may be named as a cost center, where at a lowermost level it can be called as a cost unit. So with the help, once you are linking that to a particular activity or object or whatever it is, then it will take the form of a cost center, and the lowest part of the cost center will be a cost unit. So now that will take us to what is cost center. So the definition of cost center is it can be a location, it can be a person, it can be an item or equipment or a group of item in connection with a undertaking in relation to which cost ascertained and used for the purpose of cost control. So it can be person, it can be location, it can be equipment. So where the cost can be accumulated and identified to that particular person or location, and this is done with the relation to cost ascertainment, and also this is done for the purpose of cost center. I told you one production three production departments you have. Each of the production departments can be considered a cost center, or you have three type of products. So each of the product can be considered as a cost center. So it can be anything. It can be machine also. You have four machineries. Each of the machinery, what you produce out of it can be considered a cost center. So that is the definition of cost center. So The cost, next we come to cost unit. Cost unit is the narrowest possible level of a, so the unit of the cost is a cost unit. So representing, so it can be per kilometer, per passenger kilometer, or per liter, per meter. So if I am able to express the cost unit, cost center in terms of the unit, it becomes the cost unit. So next we are going to the classification of cost. The CIMA, the arrangement of items in the logic group having their nature. If you classify it in the nature wise classification, then it is subjective classification. If it is for based on the purpose of the cost, then it will become an objective classification. So if it is in the nature, classification is in the form of nature, then it is subjective. If it is in the form of purpose, then it is a objective classification. So the definition is not exhaustive. So it is just we are classifying it in the basis of nature and purpose, and it has to be a logical classification. So let us try to understand. So the cost classification can be done as under. So if it is on the basis of nature of expenses, that is element wise classification, then it can be direct material, direct labor, and other expenses. So they can ask you multiple choice question based on which of the following is not a nature wise or element wise classification of cost. They can give you direct material, direct labor, I mean labor cost, labor expenses, material cost, and they can give you other selling and distribution expense. So the selling and distribution will not be the element wise classification. Then on the basis of traceability to object, so I can have either direct cost or I can have a indirect cost. So direct cost tracing is directly attributable to that product. Indirect cost tracing will be allocated to that particular process. So on the basis of traceability, it can be direct cost and indirect cost. Then functional classification or based on the function. So it can be production cost, it can be administration cost, it can be selling cost, can be distribution cost, it can be research, and so on the functions of the management what they perform, that uh, will be the functional classification. And behavioral cost, you have fixed cost based on the behavior. So fixed cost, you remember one mantra which I have given. Fixed cost is fixed on totality, but per unit fixed cost will vary. So you should remember this for anything. So fixed cost in totality or in total will be fixed or it will be constant, whereas the per unit fixed cost will vary. And fixed cost you have to incur irrespective of whether the production is happening or not, like rent of a building, salary of the staff. So all these things, if you are not doing any business also, you should be able to incur this. So that is the reason it is called as a fixed cost. Then you have variable cost. So variable cost in per unit variable cost is fixed or is constant, whereas the total variable cost will vary with the level of production. So as and when the level of production increases or decreases, the variable cost will alter, because per unit will be fixed, whereas on the totality it will vary depending upon the production level. Then semi-variable or semi-fixed or mixed cost we can call it. So it is to a certain extent it is fixed, and after the one level of production, the cost will increase or decrease. So those are known as semi. So Up to 10,000 units, it is fixed. I have to incur the fixed cost, and after that, the per unit cost will reduce. So that is the semi-variable or semi-fixed cost. Then, if it is based on the production process, then it can be the types of the job, the costing. It can be job or contract costing, or it can be a process costing, or it can be an operation costing, or it can be a service costing. So, based on the production process, job, it can be process, operations, or service. Then based on the decision making, relevant cost. So relevant cost is the cost which is helpful for decision making. Opportunity cost. Opportunity cost is the cost of the alternative what I choose if I hadn't taken it up, what is the cost that would have incurred? For example, I do a business with 10,000 rupees. With the same 10,000 rupees, I could have kept it in an FD and I would have earned interest. So the interest on the FD would be 1,000 rupees. So this 1,000 rupees is my opportunity cost because it is the cost of not choosing that particular alternative. So that you can call it as a opportunity cost. Then target cost. So when you are doing a pricing module and all, so you target the cost to a particular audience. It can be niche market, it can be middle class, it can be lower middle class, like that. If you are doing it based on the target audience or whom your target is, it is a target cost. Standard cost. Standard cost is a cost of producing standard cost of producing a product. For example, there is a set standard that I will be able to produce a product at the 10 products at 10 rupees. That means 1 rupee each. That is the standard. If another person works on it and he is able to produce uh, 12 12 products at 10 rupees, that means he is overachieved. So the standard cost is the cost of producing the standard product, or time also. I take 8 hours to produce 10 units. If I take 8 hours to produce 15 units, that means I have achieved more than what the standard is. Marginal cost, the cost, it is the incremental cost. It is the cost of producing one more extra unit. So that is the marginal cost. Budgeted cost. So the cost of that cost at which you budget the thing. So or it you can also call it as an estimated cost. So like this, you have sunk cost also. Sunk costs are historical cost. It is irrelevant in the decision making because it is already incurred. So it can be a historic cost, which is not helpful in the decision making. So we have understood how to determine the cost object, cost center. Then we have seen what is cost accounting, costing. Then we have also seen the classifications of cost. So with this, we have done with this chapter on introduction. So do you have any doubts regarding this chapter, or we can go ahead with the cost sheet? Ma'am, 8:30 it is. So yeah, how has all the students joined?
Yes, sir.
Okay.
So
So do
I
they?
request to all students. Yes, sir.
Yes, go ahead.
Okay, okay, sir. So students, I request you to, if you want to take any topic to discuss here. So please post the topic in Q&A section. We will discuss here. If you have any doubt in any topic, please post in Q&A section. So student, actually one student's post take a questions.
Mhm.
So they want you to take a questions, costing
What
questions,
question?
costing numericals and numericals.
Okay, we'll run through the. So the thing is, so you understand the format of cost sheet. So direct material, direct labor, direct expenses will form part of your prime cost. So to the prime cost, if you take for raw materials, so opening stock of raw material plus purchases minus closing stock will give you the total consumption of materials. So material labor expenses will give you prime cost. To the prime cost, you add the indirect expenses. So that is in the form of factory overheads. So you get the works cost. So in the works cost, you add the opening WIP and you subtract the closing WIP. So you will be able to arrive at the factory cost or the works cost. So to the works cost, when you add the office and administrative overheads, uh, uh, office and administrative overheads, you get the uh, cost of production. So to the cost of production, you add the opening stock of finished goods, subtract the closing stock of finished goods, you get the cost of production. Then we added, then we add the selling and distribution expenses. You get the cost of goods sold. So this is the generic format, and then to once you get the cost of sales, you add the profit element, then you will be able to arrive at the selling price of that particular product. So that so they have given you the format so you can run through. And I would like to state to the students that we have done the numericals for the understanding purpose. So for your MCQs, you will not get any lengthy problems what we have worked at all. Just I'm clarifying to you on that. So you got the factory cost, then you got cost of goods manufactured, then you got fair cost of finished goods, then you got cost of goods sold, and then you add the profit element.
Sir, actually there is no response received in Q&A section. So
Okay.
you can continue with your topics, or if any students response, we will discuss it.
Okay, sure.
Yes, sir. Thank you, sir.
And then we saw for each of the components of cost sheet, what is the so they can ask you multiple choice questions to find out what is the purchases. So you have the opening stock, you have the purchases, not pur you have the direct expenses, you have the closing stock of raw material. So you can use the formula opening stock plus purchases minus closing stock will give you the consumption. So direct expenses also to be added like freight and all that, which is related to the purchase. So we saw for job costing how to proportionate Then for service costing or the operating costing, you have the fixed cost and you have the running expenses. So all those things you have to do. And treatment of work in progress, we have told you have to add the work in progress to the production cost and you have to subtract the closing stock of WIP. So you get the works cost. So service costing, so you have fixed or the service standard cost, you have the maintenance expenses and other running expenses. So we saw in the problems also we saw for transport industry. So we saw cost items will be operating cost will be petrol, diesel, engine oil, drivers, wages, then clearance, cleaners, wages, depreciation. And I told you depreciation depending upon what kind of industry you are working in. So you have to see whether it is a operating cost or it is a maintenance cost. So for transport industry, the bus is very important. So that is the reason why they have taken it as an operating cost. And then variable cost, you have tires. So for the wear and tear, painting, denting, cleaning and overhauling charges, all these things will be your maintenance cost. And then you have fixed cost like garage rent, insurance, taxes, road permits, general supervision. So all these things, you take the total cost. So again here, remember the fixed cost, variable cost reference, and also very importantly, you have to see what if they're given on cost, how to take it on sales and all that. That is very, very important. So if it is 25% on sales, then it will be 20. I mean, if it is 20% on sales, then it will be 25% on cost. So I have explained to you how to calculate that also. So then you arrive at the tons mileage, then cost per ton miles or ton kilometer. So whatever it is, the transport industry. So they they can be passengers also, but it can be passenger kilometer also. It can be tons. If they are shifting the goods and all that, then it will be tons mile. So next we are moving to the automobile industry. So automobile industry, you have all these things: material, direct labor, expenses, overhead, quality. So quality control will come here. Research and development cost also is something which is peculiar to this automobile industry. So other administrative overheads are same. Add opening work in WIP, closing WIP, total cost. Then very important is credit for recoveries or scrap. So they can give you a multiple choice question. The scrap on sale of the sale of scrap will be adjusted with. So it will be adjusted with the factory overheads. So like that questions can come. So cost of production, then you have inputs received free of cost. There will be some certain samples and all. So that will be adjusted with the cost of production. Then automated cost or amortization cost. So all these dies and all will be amortized. So it is like a depreciation only. So because they are not fixed assets, you are going to amortize it. Then you get cost of production for goods produced for captive consumption. Then you add the opening stock of finished goods, closing stock of finished goods. Then you get the cost of production for the dispatched material. You add the profit element. You get the selling price. So I told you certain times you have to prepare a quotation and all that. So that quotation also will be a part of your cost sheet only. Then retail business. So in retail, you'll not have all the above like scrap, like free material and all those things will not be there. So direct expenses, direct wages, salary, Prime cost are the retail overheads में you will have more of selling and distribution expenses. Then maintenance cost, indirect labor, cleaning and other costs. Then printing and stationery, light and water, rates and taxes, all these will be operating costs. So you get the total cost of production. Then you have selling and distribution overhead, sales commission, sales promotion and advertisement, distribution. I told you in retail business, this will be more. So you will get the total cost, then you get total cost of sales, you add the profit element, you get the selling price. So boiler house and all, we will see it will be classified into fixed expenses and running expenses. So cost also fuel and labor. So it will be fuel, electric power, your fuel handling charges, ash removal charges, direct wages, then water, all these things will be. And then you have this is the operating cost, maintenance cost, and the fixed cost. So mean maintenance cost, you will have boilers, cleaning, coal bunkers, eco emitters, then mechanical shockers, all these maintenance will be there. So that maintenance cost will be classified here. And then you have the fixed cost, which is the supervision, salary, then rent, then depreciation. All these things will be the fixed cost. I told you depreciation, it can be either an operating cost or a fixed cost depending upon the nature of product or what we are dealing with. Then with the thing next, we are moving on to the powerhouse. So the unit of measurement will be kilowatt hour. So they can ask you the unit of measurement of electricity production company will be dash. So the answer is kilowatt hour. So the cost unit you remember for each, for example, for a shirt, it will be meters. For transport industry, it can be passenger miles or passenger kilometer, or it can be ton kilometer. So like that, likewise, for the electricity production or distribution company, the cost unit shall be kilowatt hour. So you have the operating cost, that is the steam production cost. You have coal bunkers, wages, maintenance, and all those. Then you have the steam used for electricity generation. So that is captive consumed, that will be subtracted. Then you have the electricity generation cost, wherein you have wages, stores, maintenance, and all, and you get the total cost. Canteen, I told you, will be a service costing. So till now, what we were seeing was a product cost because product is involved there, electricity is there, and we saw for retail industry, for automobile. So all these are production based and product based. Whereas here, when we talk about canteen, it is a service costing. So you have the same service costing, you have all the provisions that is operating, that is meat, fish, vegetable, fruits, milk, tea, coffee, bread, cakes, and others. So which is generally the operating expenses. Then you have wages and salary, which is fixed in nature, cook salary, clerical staff, helpers, servers, supervisions, and all the supervision salary and all that will be the fixed salary and services. So you have gas, electricity, power, and all that. Then coming to other fixed cost, it can be rent and depreciation. So we have seen for each of the industry. So what will be the costing? So the product costing is little different from the service. So in service costing, basically you have the operating expenses, maintenance expenses, and fixed expenses. So if you remember this, so we can work out the problems relating to the cost sheet. So coming to the problems per se, I told you already, for understanding purposes, we are working out the problems, and these problems will not appear for your testing purposes. So I will not solve the problems per se, but what I will do is we will run through the solution. Okay. So following data is available from the cost records of the company for February 2007. So the opening stock at jobs as on 1st February, job number 410, direct material 80. So this is the opening stock of job. That means it is the opening stock of raw material. The wages also is there and factory overhead is also there. So direct wages 150 and factory overhead 200. And for job 411, direct material is 420, direct wages is 450 and factory overhead is 400. So direct material issued in the month is 410, 411, 412, 413. All they have given. All the direct material issued. Then direct labor hours. So for each of the job 410, 411, 412, 413, the hours and the amount is given. The factory overheads are applied to job on production according to direct labor hour rate, which is 2 rupees. Factory overhead incurred is 2100. So you have to see applied to the job means it is the standard. Standard is 2 rupees per hour. But what is the actual? So the factory overhead incurred is 2100. So 2100 divided by total number of hours. So the total number of hours is 400, 600, 600 plus 300 is so the total is 1000 hours. So 2100 divided by 1000 will be 2.1. So the standard rate is 2 rupees, whereas the actual absorption of overhead is 2.1 rupees. So job work 410, 411 were completed during the year. So it is completed. They were billed to the customer at a price which included 15% of the price of the job for selling and distribution and another 10% for price of profit. So prepare a job cost sheet for 410, 411. Determine the selling price of the job. Calculate the value of work in progress. So we have already calculated the actual overhead rate is 2.1 and the standard was 2. So 410, 411, you have direct material, direct labor, prime cost, factory overhead. You should not take 2 rupees, you should take 2.1 because actual factory overhead. So 2.1 into the number of hours of job for 410, 411. So you add the opening stock of WIP include that is the material labor overheads and you don't have any closing as such. So only we do the adjustment for opening WIP, you get the factory cost. Then selling and distribution overhead. Selling and distribution, they're saying it is 15%. 15% on the price of the job, they're saying. So let us say let the selling price be 100. So selling and distribution expense is 15%, that is 15 rupees, and profit is 10 rupees. So if you subtract these two items, from the selling price, you get the cost. So the cost is 75. So selling and distribution expense will be 15 by 75 of the factory cost, and profit will be 10 by 75 of the factory cost. So you arrive at it. Factory cost, you calculated it, and you will arrive at the profit also, and you will arrive at the thing. So we are asking to compute the work in progress. So we will do it in a simpler way. Job work in progress, direct material, direct labor, factory overhead. So when you add all the three, you get the total WIP. So this is a much easier method that is going for a. So they can give you a multiple choice question saying ki this is the thing, how to calculate. Next, for prepare a cost sheet for an engineering company which produces standard components in the batches of 1,000 pieces. A batch passes through three processes, that is foundry, machinery, and assembly. The material used for batch number 2007, foundry 1,300 at 50 rupees per ton, of which 50 per ton were sent back to the stores. So they've given foundry, they've given direct labor overheads, machining also direct labor overheads, and assembling also direct labor overheads. A comparison of actual cost with estimated cost discloses that the material and overheads have exceeded the estimates by 20%, whereas the estimated labor cost is 10% more than the actual. Show the variances with respect to the estimate. So we have to calculate what is the estimated and what is the actual. So if you have go through the problem already, we have done the calculations and all that. So in the calculation, we have said let the um, actual be x, so x plus 20% of x is equal to so much. So we have calculated all those things. So please refer to your problems or the screenshots you have taken from my previous thing. So when the actual material cost here is working out to be 62,500, whereas estimated is 52,083. So I have exceeded the budget, so estimated is less and actual is more. So that is the reason why I'm getting an adverse variance. So when you go for direct labor, so you have 2000 is the actual. So they have said it is 10%, 20% of the expected labor cost, 10% more than the actual. So 10% of 2000 is 2200. So here it is easy calculation. So here my estimated is more than my actual. So actual I am able to uh, uh, have a lesser cost than the estimate. So it is a favorable variance. Like this, you have arrived at the cost per unit. So please refer to the solution which I have already provided to you. Screenshot. So how to arrive at the estimated cost we have explained and we have worked out in detail. So I'm not working out in detail as of now. So you go through that. So one thing you have to understand is if the estimated is less than the actual, then it is an adverse variance. If the actual is less than the estimated or budgeted, then it is a favorable variance. Then here again, this problem also we have worked out. So an advertising agency has received an inquiry for which you are supposed to prepare a quotation. Bill of material prepared by the production department for the job states the following requirement of material. So paper, you have 10 reams at 1800 per ream. So 1800 into 10, 18,000 will be the paper cost. Ink and other printing materials, it is 50,000. And the binding material and other consumables, it is 3,000. So it's 5,000 and 3,000. Sorry. Some photography is required for the job. The agency does not have a photographer as an employee. It has to hire by paying him 10,000. So this is the cost which is particularly for this particular job. The estimated job card prepared for production department specifies the use of the following employees. So artist will be working for will be getting 12,000 per month, and 80 hours is dedicated to this particular job. Copywriter, he is getting 10,000 per month, whereas for this job he is going to devote 75 hours, and client servicing gets 9,000 per month, whereas for this particular job he requires 30 hours of his services. So the primary packing material will require to the tone of 40,000. Production overhead, 40% of direct cost, while selling and distribution overheads are likely to be 25% of the production cost. The agency expects a profit of 20% on the quoted price. The agency works for 25 days in a month and 6 hours a day. So that means in totality, they work for 25 into 6. So direct material, very straightforward. 1,800 into 10, 18,000. Ink and printing material, 5,000. Binding material and consumables, 3,000. And primary packing material, 4,000. So my direct material cost is 30,000. So coming to the direct labor cost. So totally I work for 80 hours in a month. So that is 25 into 6. So the total I get 12,000 for working for 80 hours. Sorry, 25 into 6 is not 80. No, one sec, hold on. Just hold on. So 150 hours is what I have worked in a month. So 12,000 into 80 divided by 150. Copywriter, it will be 10,000 into 75 divided by 150. And client servicing, it will be 9,000 into 30 by 150. So it will be 6,400, 5,000 and 1,500. So photographer is specially dedicated for this particular job only, so production only. So that also will be added. So the total labor cost will be 23,200. So my prime cost will be 30,000 plus 23,200. It will be 53,200. Then factory overheads, they are saying it is 40% on direct cost. So 40% on direct cost means prime cost only. So 40% on the prime cost will give me 21,280. So I got the factory cost or the production cost. Then selling and distribution is 25% on the production cost. So on the production cost will be 74,480. That is the prime cost plus factory overheads. So will be 25%. So 18,650. Total cost will be 93,100. So the profit will be if they are saying it is 20% on the selling price. So if it is 20% on the selling price, then it will be 25% on the cost. So you remember we have worked it out. So 100 into 25 by 80. So that will give me the price on. So you remember 20% on the price will be 25% on the cost. 25% on the price will be 33 1 by 3% on the cost. So these are the one or two things. So they can give you a multiple choice questions saying ki this is if this is the percentage on the selling price, how much is on the cost. So we have worked it out also. So the price to be quoted will be 1,16,375. So we have worked it out in detail. So the following figures were extracted from the trial balance of the company as on 31st March 2006. Inventories, raw material, WIP, finished goods. Then you have office appliances separate. It is not a part of inventory. Then plant and machinery, buildings, stock. So stock will be a credit balance. Sales returns, but material purchased, freight on material. So it is a direct cost, a material cost. So it will be used for opening stock of material plus purchases plus freight minus the closing stock. Then you have purchase returns. Again, it is a credit balance. Direct labor, indirect labor, factory supervision, factory repairs and upkeep, heat, light and power, rate and taxes, miscellaneous factory expenses, sales commission, sales traveling, sales promotion, distribution department salary of 7 people, then office salaries, then interest on borrowed funds. Further details were given. Closing stock of material 1,80,000, WIP 1,92,000, and finished goods 1,15,000. Accrued expenses of are direct labor 80,000, indirect labor 8,000, and indirect labor 1,200, and interest 2,000. Depreciation should be provided 5% on the office appliance, 10% on machinery, and 4% on building. Heat, light, and power are to be distributed in the ratio of 8:1:1 among the factory, office, and distribution, respectively. Rate and taxes will be 2/3 factory and 1/3 office. Depreciation to be building to be distributed in the ratio of 8:1 and factory and distribution respectively. Factory, office, distribution respectively. Prepare a cost sheet showing all important components and also a condensed P&L account. So direct material opening stock at purchases as price less the returns less the closing stock will give you the material cost. Then labor cost, you add the actual and you have the accrued. So that will give me my prime cost. Then factory overheads, indirect labor, accrued indirect labor. So factory supervision is only pertaining to the factory, so it will come here. Repairs and upkeep also will come as a factory overhead. Light, heat, and power will be distributed in 8:1:1. So 8 divided by 10 of the light, heat, and power will be the light, heat, and power here. Then You have rates and taxes, so it will be 2/3 factory overhead. So 2/3 of the total rates and taxes will come here. Miscellaneous factory expense will come. Depreciation on plant and machinery, whatever rate they have said. Depreciation on building, they have said depreciation on building should be apportioned also in the ratio of 8:1:1. So 8/10 of whatever depreciation percentage into the value will give you the depreciation on buildings. Then you add the opening WIP and you adjust for the closing WIP. Then you arrive at the factory cost. Then you have the administrative overheads. Then you have in the administrative overheads, you have heat, light and power, rate and taxes. You have depreciation on buildings. Again, it will be 1/10 of the building depreciation. Depreciation on office appliance 4% you have to calculate, and office salary 8,000. So heat and power 1/10 and rates and taxes 1/3 will come here. Then you add the opening stock of finished goods, then you subtract the closing stock of finished goods. So what you arrive at is the cost of production of the saleable units. Then comes your selling and distribution expenses. So we have light and heat 1/10 again here will come here. Depreciation on building again 1/10 will come here because 8:1:1 is the ratio. Sales commission only attributable to selling and distribution expenses. Sales traveling expenses also are direct expenses attributable to selling and distribution. Sales promotion is also a selling and distribution expenses. So distribution department expenses is also a selling and distribution. So to the cost of production, when you add the selling and distribution expenses, you get the cost of sales. So here the thing is the ratios are important. So 8:1:1 is the thing, 2/3 is the one. So they've given you, so this is a very comprehensive problem wherein you have almost all the adjustments. Then they've asked you to prepare a condensed P&L account. So you got the cost of sales. So you have the revenue, that is the sales income of 7,68,000 less sales returns. Then cost is as above 71,000, 7,14,020. So you have to, apart from the cost, you are supposed to take the interest cost because interest is on the borrowings is not a part of your cost because it is a financial, pure financial, it's a pure financial item. So that is the reason why it will not be included in your cost sheet. But when you prepare a P&L account, it is a part of the P&L account. So you will take 2,000 plus the accrued cost of 2,000. So 4,000 will be the total cost of the borrowing. And then you subtract the cost from your sales, you arrive at the net profit of 35,980. Okay. Can we take a 10 minutes break because my throat is paining a bit.
Yes, sir, sure, sir. So
10 minutes.
students, it's a short break of 10 minutes. We will resume the session at 9:20. If you any doubt in any topic, please response in Q&A section. We discuss it. Sir,
Yeah.
if you not have any more topics to discuss here, so you can wind up the session after 10. Or
Yes,
if
sir.
you want to continue the session,
No,
so you
no, I
will
have
discuss till 9:30.
other, I have a meeting at 11:30, so I have to
Okay, okay,
rush.
no issue, sir. So we will wind up the session after 10. If
Yeah,
students not responding, so we will wind up after 10.
okay, okay.
Yes, sir. Thank you. Hello. Jain sir, are you there? Hello. Hello, sir. Sir, you are mute.
Yeah. You're able to hear me?
Yes, sir. Yes, sir. Now here to. So you sir, sir, can you resume the session,
Yeah, yeah.
please? Please continue.
So the Prakash Transport Company has given you a route for 20 kilometers long to run a bus. The bus costs 12,50,000 with an estimated useful life of 5 years. It is insured at 3% per annum. Annual tax amounted to rupees 2,50,000. So it's 25,000. The garage rent is 5,000 per month. Annual repair cost is estimated at 50,000. The driver is paid a salary of 7,500 per month and conductor is paid 5,000 per month in addition to 10% of takings as a commission to be shared equally by them. Office stationery would be 1,000 per month and office salaries would be 10,000 per month. The diesel will cost rupees 30 per liter and the bus would travel a distance of 5 km per liter. The bus will take 3 round trips carrying an average passenger of 40 on each trip. So that means 20 into 3 into 2. That is a round trip. Assuming a profit of 15% on takings, calculate the fare to be charged from each of the passenger. The bus will operate for 25 days in a month. Okay. So before calculating the cost, we will calculate the diesel cost. So number of round trips is 3. So to and fro will be 2. So 3 into 2. Kilometers on road will be 20. Days on road will be 25 days. Average passengers carried will be 40 and number of months is 12 months. So the total passenger kilometer will be 1 lakh I mean 14 lakh 40,000. So remember this as of now. So the diesel cost will be number of kilometer per liter is 5. Number of kilometer per annum is 36,000. Number of liters required is 7,200. So rate per unit is 30. So the total diesel cost is 2,60,000. So we have worked out the problem. Please refer to it. So I've given you how to calculate each of how to do the number of kilometers and all that per annum, how much to calculate. So we'll see the cost, operating cost, diesel cost calculated, working note one you would have seen, I would have calculated. Depreciation is 12,50,000 divided by 5. Repairs 50,000. Repairs 50,000. Then commission, drivers, and this we have to calculate in working note number 2. If you see, you will be able to uh, do it. A screenshot, or maybe you would have worked out the problem. Fixed cost insurance is 3% of the cost of the vehicle. Taxes is there, garage rent is so operating expenses and fixed expenses. Driver's salary, conductor salary, all these are fixed. Office stationery, office salary. So all these are fixed expenses. So you have to say profit is 15% of taking. So before that, you have to take the commission. So before commission, what is the price? We don't know. So we will assume it. So working note number 2. Calculation of takings and commission. Let us assume the total takings to be 100. So commission is 10% of taking and profit is 15%. So the remaining cost is 75. So 10 by 75 of the total cost before the commission will give you the balance cost. So commission is 10 by 20, 75 of 9,25,000 and profit is 15 by 75 of 9,20,500. So once you take the commission, you add the commission to it, and then you will arrive at the total cost, and you will add the profit. So you will get passenger kilometer. So divided by the total passenger kilometer, you will number of things will give you the price per passenger kilometer. So refer to the solution, detailed solution which I have worked out in the earlier classes. Then next one. The City Pride Theatre has revealed the following estimates of the cinema hall. Salary for one manager is 8,000 per month. 10 doorkeepers, it is 2,000 per month. 2 operators, it is 4,000 per month. And 4 booking clerks, it is 2,500 per month. Then you have annual expenses. Electricity, it is 12 lakhs. Carbon, it is 3 lakhs, and miscellaneous expenses 1,50,000. Advertising rupees 7,50,000. It would earn an income of 25,000 on the advertisement shown on the hall. So 7,50,000 minus 25,000. Hired of film 15 lakh per film on 15 films. So it will be 15 lakh into 15. Administrative expenses 80,000. The premise cost to be 60 lakhs and has to be depreciated over 15 years. Projector and other equipment cost 25 lakhs and are to be depreciated at 25%. The plan is to have 3 daily shows on all 360 days in a year. The capacity is divided into 625, wherein you have lower class 250, upper class 250, and balcony 125. 20% of the seats are estimated to be vacant. The weightages to be given to the three classes are in the ratio of 1:2:3. If the management wishes to earn a profit of 25% on the gross proceeds, find out the rates to be charged for each class, round off to the nearest rupees. So let us see what. Let us see the cost unit. So number of shows in a year is 3 into 360. So that is 1080 is the number of shows. Number of equivalent seats will be 250 into 1, 250, 250 into 2, 500, 250 into 3, sorry, 125 into 3 is 375. The total seats is 1125. Less 20% vacant seats will give me 225. So the net chargeable seats will be 900 seats. So 900 seats will be chargeable. Okay. So let us see the operating cost. Electricity, it's 12 lakhs. Carbon 3 lakhs. Miscellaneous expenditure 1,50,000. Advertising 7,50,000 minus 25,000. 7,25,000. Hiring of films, it is 15 lakh into 15, it is 2 crores 25 lakhs. So my total of the operating cost would be 2 crore 48 lakh 75,000. Then coming to the fixed cost, manager salary 1 into 8,000 into 12, doorkeeper 10 into 2,000 into 12, operators 2 into 4,000 into 12, and booking clerk 4 into 2,500 into 12. Depreciation on premises is will be 60 lakhs divided by 5, that is 4 lakhs. Sorry, 15 years, right? 15, it will be 4 lakhs. And depreciation on project equipment is 25% of 25 lakhs, that is 6,25,000. So my total fixed cost is 15,77,000. So my total cost will be 2 crore 64 lakhs 52,000. So they are saying if it is 25% on the gross proceeds, then it will be 33 1/3% on the cost, or 1/3 on the cost. So that will be 8,61,000. Sorry, 88,17,333. So my gross earnings will be 3 crore 52 lakh 69,333. So the number of man shows in a year will be 900 into 3 into 360. That is 9,72,000. So earnings per man show will be 36. I think there was some difference in this problem. So one of the cost they had not included somewhere, if I'm not wrong. One of the cost was not included. Administrative expenses. It's not included. So after including, you have to get the price. So we have worked it out correctly. Administrative cost has not been considered here in the fixed cost. So after considering, there will be slight variation in the per unit cost. So we got somewhere around 36 point something. So the rate of will be as per the weight. So 36.29 into 1, 36.29 into 2, and 36.29 into 3. So that will be the price. So we had a slight difference in our when we had worked out the problem, mainly because of the administrative expenses not being considered in the problem. So that is, we please consider administrative cost also. It's also a part of the fixed cost. So if you refer to our solution, then we have very much done about the same. So with this, we have come to a conclusion on the cost sheet. Then we saw about the project accounting. So project accounting is something where you track all the expenses to that particular project. So you prepare a MIS to have a informed decision making. So very, very important is cost control is there. Right? So you can do a cost control also in project accounting. Then you can maximize the profit. So how can you maximize the profit? So there are multiple choice question can be how to maximize the profit. The profit can be maximized with the minimization of cost. So when the cost is less, then the profit is more. So cost and profit will have an invariable invariable proportion. So it will so higher the cost, lower will be the profit. Lower the cost, higher will be the profit. So they have inverse relationship. So you track all the expenditure income to a particular project. So it will be a cost center or a profit center where all the costs are accumulated, also all the revenues also accumulated, and you arrive at what at the project level itself. You will see how. So like we'll take an example of Shobha developer. So Shobha Rose, or you have Shobha Orchid, you have Shobha Sandalwood, you have. So three projects you have. So at each of the project, I'm going to accumulate the cost and revenue. So directly attributable cost is will be a charge to the project, and whatever cannot be charged will be allocated. So directly chargeable means will be charged to the product. When they cannot be directly chargeable, then they are allocated. So with this, you will prepare an MIS, and so that means what are the prerequisites? So it should be capable of tracking the financial and operational information. It must have the capacity to track all the relevant information relating to income and expenditure account. It must incorporate an expectable methodology for allocating income for which cannot be directly charged to the at the project level. So what are the business uses of? So let us understand the project accounting life cycle. So what are my inputs at the project level? So management or maintenance activity. Then you have income expenditures. Then you have inventories, purchases, overheads. So accounting says so you will classify this into the accounts, sub-accounts, and you will prepare the cost center allocation, cost allocation you do. Then your output will be your internal reporting in the form of MIS, and this MIS will be used for financial planning, budgeting, internal audit, and internal controls. So what are the business uses? It will be financial planning. It will be helpful in budgeting. It will be helpful in internal audit, and it will be also helpful in internal control. So the MIS will help you to make a decision, and there's decisions how you can make, how can you utilize the internal reporting is doing an analysis of the cost in the form of financial planning, budgeting, internal audit, and internal controls. So a minimum requirement will be the fundamental characteristic is that it should be able to track all the income and expenditure at the project level, should have the capacity to report it in a accurate manner, and it should be as frequently as the management decides. So it can be monthly, it can be daily, it can be quarterly, it can be half yearly, it can be yearly. So it can be anything. It should also maximize the income and minimize the expenditure, and it can see what all directly chargeable to the project or which can be allocated. So that is what. Then we will see project accounting system application. So you prepare the chart of accounts in the form of ledgers, sub accounts, and cost centers and all that. Then you record the transactions in the form of journals and ledgers. So first you prepare, you take the your vendors records, your bank details, everything, and you open the nomenclatures. So that is the preparing the account. Then you record the transaction in the form of journal and ledger. So it's more or less like your financial accounting system only. So I told you nowadays everything is done in an integrated process. So you don't do it redundantly for financial account separate and this separate. With the help of the information what you have entered in the financial accounts, you will be able to extract all these things. So then you collection of data of the projects on the from the transaction. So you all whatever is relevant from the ledgers and all, you will collect the data. Then you prepare a forecast and budget. So forecast budgeting, I told you that is one of the business users of your project accounting system. Then you segregate income and expenditure of that particular project. So what is the total income? What is the total expenses? You prepare an income and expenditure account for that particular project. Then you calculate the variance from the budget. So you have actual also, you know what is the budgeted also. You do a variance analysis. So whether it is an adverse variance, if it is a favorable variance. In case of adverse variances, you analyze the overall impact on the project, and you try to take a corrective action. So wherever there's adverse variance, so you see what went wrong and what has gone wrong, because of which you are not able to achieve the budgeted figure, you have exceeded. So you try to take a corrective action. So let us see how to prepare a receipt and expenditures of the project. So statement of operating receipts and expenditure account. So operating receipts, you have sales proceeds, that is the incomes will be in the form of sale proceeds, other services, total sales you get, and other operating incomes, interest on projects and other income. So you get the total operating incomes. Then operating expenses, salary, wages directly attributable, legal expenses. So you have to allocate stationery printing allocation, traveling expenses, maybe allocation, audit fees allocation, miscellaneous expenses allocation. So whatever can direct, which cannot be directly attributable, will be allocated. Most of the admin expenses are allocated only. Then maintenance and utility, if it is directly to that project you are able to identify, then direct, otherwise allocation. So water and electricity. Then you have gas and fuel, power, electrical maintenance and other utilities. So you got the total utility expenses. Then you got the general expenses, wherein you have the insurance expense, allocation, rates and taxes allocation, contribution to your PF, ESI if they are directly the labor of the uh, particular project, then will be here. Otherwise, allocation, interest on loan. Because we are talking about project accounting, so we will take all the income and expenditure. So we'll not only concern about the cost here. So when we talk about cost, the interest on loan will not be considered. But here we are talking on project accounting where income is also there, expenditure. So everything is there. So here you can include the interest on loan. So you understood. So when it is interest on loan is not a part of the cost per se, but in project accounting, it will be a part of it. And other general expenses. So you got the total income, you got the total expenditure. So the net profit from the project will be total income minus total expenditure. So that will give you the total either profit or it can give you a loss. And we also saw what are your employable skills as a stores accountant, as an accounting person, as a sales and accounts receivable, as an asset management, so cash management, payroll, procurement. So all these areas we have seen what is the role. So So in stores, you do inventory planning, stock master data maintenance, then physical or warehouse management, inventory movement, stock counts and reconciliations you do. As an accounting person, that is your CMA as an accountant, you will, as an accounts manager, you will be into accounts, master data maintenance or master data maintenance of all the levels. Very, very important. Routine, non-routine, escalation of data, month end, year end, annual closing will be involved. Financial reporting will be involved. Reconciliations, checks and approvals you will do. Then sales and accounting receivable. Sales planning you do, pricing you do, customer and price data maintenance, ordering dispatch, in invoicing, sales returns, accounts receivable and collection. So asset management, you will be involved in capital investment planning. So how much will be your outlay, fixed assets addition, investments addition, fixed assets transfers, retirement, fixed asset safeguarding, counts and reconciliations you do. You will check the uh, fixed assets registered and you do a physical counting, whatever is the difference, all that reconciliations you do. Fixed asset register maintenance, like I told you, master data, fixed assets, it is fixed assets register maintenance, depreciation and amortization. You have to run the depreciation, calculate the depreciation, do the amortization. So you'll be doing all those things. In cash management, you do the cash flow planning. I told you cash flow, it can be operating activity, investment activities, and financing activities. So how do you manage cash and bank accounts? How you pass entries? Who has the authority to withdraw? So all those things will come here. Managing your loans. So if you have finance from outside in the form of CCODs, working capital loans, term loans, all those managing of loans you do, cash movements you do, see how that movement of cash is, where is going, how much is received, all those things, and managing the treasury or investment activities. Then in payroll, I do a HR planning. Then HR activities will involve recruitment, termination, transfers, performance management, union matters, handling if it is big factories and all, it will come. Employee master data maintenance, and then payroll management, wherein you do a master data maintenance of all the employees. You prepare a payroll, you get approvals for payments, and you make sure payments are made, are credited to that particular account, or a check is issued. Procurement and accounts payable. So purchase planning you will be involved in. Vendor selection, you take quotation from the vendors and you select which is the best, lowest and best option available. Then vendor master creation, you are have to do and maintain that. Purchase request and order management, you have to whenever purchase orders have to be issued, then we have to do that. Then you have to receive whenever the goods are there, you have the GRN and all, you account for GRN, you receive the goods. Then accounts payable and payments. So based on the payment terms, you have to classify the trade payables and then make sure the payments are happening on time. Otherwise, you have a lot of things now, MSME, we have to pay interest and all those things. So just to avoid that, it is better we make payments on time. Then vendor performance evaluation. So you have selected the vendor who had quoted the lease, but you should ensure that he is providing you the quality material or not. So if he is not providing quality material, then you can replace him. So you do a performance evaluation and manage the vendors per se. So this is the total syllabus. So I think we have revised everything. So you will have multiple choice questions only. And if you answer that correctly, minimum marks you obtain, then I think you are qualified. You will be allowed to write your exams and all that. So from my end, that's it. So all the best for your future. So in case you have any doubts, please ask. Otherwise, I think we can wrap up the session.
Yes, sir. We wait for 2 minutes. If any questions responded, any student respond, we will discuss the doubt. Otherwise, we will end up.
Okay.
Yes, sir. Thank you. Dear students, if you any doubt or if you any questions related to cost accounting principle, please post in Q&A section or we will wind up the session after 2 minutes. Sir, there is no responses received from any students. So
Okay,
we'll
then we'll
declare
wind
that
up.
to this.
So all
Yes,
the,
yes, sir.
yeah, so all the students, all the best for the future. So I hope you will qualify to be a CMA. Okay, so bye.
So students, we will wind up the session today and we will meet tomorrow for the repeating session of Tally. Have a good day. Have a good day, sir.
Yeah, thank you.
Thank you so much.